Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the dollar yen, which has broken above 110. That's kind of corresponding with the S&Ps that are right now at highs or currently at 3370. And also the NASDAQ's at 9574. So those, now the NASDAQ isn't at all-time highs, but we're not that far away, and the S&Ps are just a spit away from their all-time highs. So with that, the dollar yen has gone and pushed above 110. We've run into a little bit of a resistance over here at 1013, and we'll kind of back it off a little bit. We'll see how that goes and transpires. We've also seen the euro come off the lows from yesterday. Remember, we had our bias chart, or not bias chart, but our head and shoulders target for 919. We had supported 897 yesterday. We got as low as, I believe it's 892, and then we responded, not with a huge rally at all by any means whatsoever, but they picked them up a little bit, and on a pullback, looks like we've made it back down here. $901, 902 essentially, before starting to pop back up again here. Dollar CAD has continued to ease back after making a run. We've been struggling with that 3309 area here, and then a couple of days ago we had the Canadian Finance Minister concerned about the impact to the Canadian economy from the coronavirus that kind of allowed that to push higher. But since then we've been gently paring back here. As far as on the economic calendar for today, fairly light. We do have Eurozone industrial production that's going to be out at the top of this next hour. Reuters poll is going to be for negative 1.6%. And then that's about it until we get into the States. And other than NBA mortgage financing rate, there's really nothing there. Let's see here. Nope. We did see the New Zealand dollar going and come off of these lows. Not in a huge way, but we did come off of these lows here as the RBNZ held the cash rate even, no change whatsoever. So other than that, and the dollar index, as I mentioned, I noted in the chat room, it did look like a little bit tired or a little bit exhausted yesterday. We did back. We made one more jump real quick, just above those highs. Looks like we made as high as 98, 98, 95. And then we've kind of pared back just a bit. But this would have corresponded at the same time that the euro came down here at 902. But it is looking a little bit tired up here, a little bit stretched. So we may need to go in and take a bit of a pause to refresh. And also with cable, just pushing a little bit higher. With that, we'll go in and take a look at what we have as far as the news, which is relatively light. So the dollar near a 4-month high on hopes of virus is stabilizing, and bear with me. And before we go there, we'll touch off into the Kiwi. The New Zealand dollar jumps as the RBNZ takes a hawkish shift. The New Zealand dollar rallied on Wednesday after the country's central bank kept interest rates steady as expected, but dropped a reference to the chance of further cuts. A hawkish move that suggested its easing cycle might be over. The Kiwi dollar jumped to 64.60 on the surprise shift, taking it away from a recent 3-month low at 63.78. We had that key level, if you remember, I think it was on the daily at 63.83. Major resistance now lies at 65.04. The Aussie dollar caught in the drought and firmed to 67.26, putting a little distance between its recent decade low of 66.57. While the Reserve Bank of New Zealand held rates at 1%, as widely anticipated, the statement omitted a previous line that would add further monetary stimulus if needed. Instead, it noted that the risk posed by the coronavirus epidemic and said that the policy had room to adjust should the economic impact from the virus prove greater than expected. The central bank also raised the forecast path for rates this year to 1% from 9/10, previously removing the chance of a cut. The rate forecast was raised, effectively signaling the easing easing cycle is over. Indeed, it forecasts one hike by 2021, said Emery Spitzer with Westpac. Overall, it looks like the RBNZ expects to keep the OCR on hold this year unless coronavirus blows up into something severe for New Zealand. Markets quickly scaled back wagers on a further easing with the quarter point move over the next meeting in March, put at least less than 10% on the RBNZ watch. A move by August was priced in at 40% probability, reflecting the risk that the fallout for the coronavirus could yet hit harder and less longer than currently thought. Recent data from the New Zealand has surprised from the upside, with the housing market and consumer spending strengthening and the government set to expand public interest. The RBA was also surprised by many by sounding less inclined to ease further, cutting risk. Super low rates would only encourage more borrowing at a time when home prices were already sharply higher. Investors assumed the RBNZ shift would also lessen the pressure on the RBA to ease, at least at the margins, and lengthen the odds of a further cut. Dollar near 4-month high on hopes virus is stabilizing. The dollar held near a 4-month high on Wednesday as hopes of spread of the coronavirus had slowed, with the New Zealand dollar gaining after the central bank dropped a bias towards the lowering of interest rates. The slowdown in the number of new cases encouraged investors to resume seeking yields. The dollar has benefited from that approach, and thanks to its relatively high interest rates. For example, the spread between the U.S. and German 10-year bond yields are holding at more than 2-year highs, above 200 basis points. The steady improvement in risk appetite is helping markets, and expectations that central banks will not rush into tightening policy anytime soon is also boosting sentiment, said Manuel Oliveira. Against a basket of major currencies, the dollar index edged higher at 98.77, just below a 4-month high of 98.95. The coronavirus epidemic has upended China's economy, the world's second largest in foreign exchange markets. Export-oriented currencies such as the Norwegian krone and Swedish crown have come under some pressure as the virus spread. Norwegian crown has weakened more than 5% so far in 2020, and the Swedish crown off by 2.6%. And with that, light news, nothing really of any note on the economic calendar, other than what we did state here is at the top of this next hour. We do have Eurozone industrial production, which is expected to be down 1.6%. We'll go and move into the analysis. Okay, moving on with the euro. Let's pull this back a bit. Focus more on the current action. The euro went sub 109 with lows of 8.92 yesterday. The pair mildly rebounded to 925 as short sought to cover an oversold market that had fallen 6 straight days prior to Tuesday. Support will be the recent low of 892 with resistance remaining at 955. So we did take a dip this morning, but we did hold just above 9 at 902. Support here is going to be the lows that we set yesterday, which was 892. And we're going to move the resistance to 955. There we go. And as I mentioned here, as we had reached that target they were looking at for 919, exceeded it. Generally, you're gonna overshoot anyway, but we had our support beyond that at 897. We took a dip down to 892, rebounded up here to 925, dip back to 902 this morning. We're kind of holding steady here. I think we're, like I said, overdone. The pair's open for a bit of some short covering until we can move, until they step in again. So that's where we stand here. With that, let's go on and, but you can see here 6 straight days. What a deluge of selling. Let's go on and move into now the cable. So on Tuesday, the cable consolidated Monday's minor gains, staying below the pivot of 29.80. We still remain below that. Resistance will be 30.30, followed by 30.72. Support remains 28.42. Well, the good thing, I guess, for bulls, I don't know if you call them bulls because it's hard to think people will be stepping and trying to buy, other than maybe a value and try to see if they can get like a rebound high. But we did hold above this 28.42, which is, in case they do take another dip lower. So we are holding above there. We can probably go and adjust that right now to come in at, now, right there, 28.87 is we'll update the support to. And resistance is going to be 30.30. If we can get some further follow through, you can see that coming right there. 30.30. Despite how oversold it is, we've had a pretty decent fallback, not as much as what we saw in the euro. But you can see here, bulls are not, aren't, falling over each other to jump back into this market. They've been fooled so many times. Okay, and looking here with the Aussie dollar, the Aussie managed to close above 67.04 after trading on the defense on Monday of the 66.53, because this was remember our bias chart support here, and this was the 127% extension of this most recent range, and we did actually manage to hold above that. The low coming into that was 66.62. We closed above 67, okay? And now we've continued to further add on to this. Obviously, benefiting from the RBNZ cutting, which also the RBA looks like they're not going to be cutting necessarily anytime soon, or at least it's taking the pressure off them, so it's opened the door for us to move higher. So as I said, resistance on Tuesday, and indicated that resistance would be and remains the 65, 62. Let me see here. We actually is pushing it, which was down way down here, but looking here as we come back up here, come in right there, 67, 62, which is going to, that resistance will stay in place, which we already had before. The only difference is with support. The only thing we're gonna improve this just a bit here is right there, 66.78. We're not willing to give this a whole lot of room. Probably, I mean, right here. We could come back down here and easily test this. This right here is good enough right there, I think, right there, which is going to be 66.83, 66.83. With that, let's go move into the Kiwi. So, and obviously we're doing the Asia analysis, which it was ahead of this, ahead of the announcement. It says ahead of the cash rate decision, the Kiwi's holding just above the key support level of 63.83. You can see here, I think we had mentioned that we had, in the news, it dipped below, made to 78 or so, but you can see the significance of the 66.83, which is in the middle of this zone here. It's a good volume, so that held the market, and obviously with the RBNZ choosing not to cut, certainly provide that support or moved higher. We made it past this first initial line here, and I would expect some additional short covering. This is going to be the key. I'm not thinking that we're going to make it today, or maybe ease back a bit, but the market is very oversold. And with the RBNZ indicating that they're not going to go on and cut, that really opens the door for us to move higher. And that's going to be right here at 64.93. And support's going to come in right there. Coming in right here. It's just going to be 64.16. Probably even do a little bit better than that. You see right there. It's going to be 64. Let's go with that, 64.29. We shouldn't get back down there if we're going to hold 64.29 in light of them not cutting. And we're so oversold, so it's going to be 64.29. We'll move into the dollar CAD. Okay, the dollar CAD closed mildly lower. Resistance remains 33.36. Support is going to be 32.48. With a break lower, send the pair potentially down to 32.07. But it's going to be 32.48. We've talked about the struggles that we've had. The door's been open for them to move much higher, and it has not been able to do it. Since the beginning of last week, we had 33.09. The only time we moved it up to 33.36 was on the jobs day to allow for some greater volatility. It wasn't even able to really, it moved higher, but it wasn't even able to come up there. Since then, we've kind of backed down again. So if we were to make a jump up, then that resistance would be 33.09. Although it looks like it's going to pair back. And here we had our support and we have 49, but it's actually, we wanted to list it at 32.48. That'll be key on the downside. If we were to break lower and grab a foothold below that, potentially it could move us down to 32.07. Not today, but could get us there. And let's go and move into dollar peso. Okay, and get back here to the peso. Despite U.S. equity gains, the dollar peso refuses to break down. Support remains at 1862 with additional support at 1851. Resistance is 1878 followed by 1888. One moment. So you can see here, despite that, we haven't even broken down by 1862. Although, I mean, we've been lower, but I'm just stating is that even today, with the equities trying to press higher, we're still not even below that. So, we're going to stay with this 1861. There is support additionally below that at 1851, but so far we haven't broken any broken lower yet. Resistance 1878. Dollar yen has gone and triggered some stops above 10.07, but you can see we're still yet to. We got up to 10.13, but now we're kind of dipping right back below 110 even. So we're going to go and retain this 10.07. You can see it right here. We did make it up to 10.13, still bullish. Support 9.39. We're going to have to go and adjust this higher. That is a key level, but in light of this push higher, come in right there, 964, which was the previous breakout area, if you remember, when we last time we're back up here. So it's going to be 964. So the dollar index, cash dollar index, is slightly lower, but not before showing some exhaustion on the 2-hour chart. The pair is susceptible to a move back to the breakout level of 98.42. Resistance remains 99.10. So back in here, you can see here on the 2-hour chart, where we were just showing some weakness right here. Let's say weakness, but a little bit of exhaustion. Did take this dip. We jumped right back up as the euro in itself made it down to 902, but then we paired back. The market is acting tired up here. Resistance is going to remain 911. I'm going to say 99.10. And if we do make this pair back, the key level is going to be this 98.42. You're looking at this area here. Before we get there, I guess on a short-term basis, 98, you can say 98.58, but it's not much. I'm saying is you could see just a little bit of short-term from the euro, which would press that. So I think potentially, look at this huge run we've had, 97.40. I mean, that's a huge run. And why I think that coming back to 98.42 would be no big deal, and why we're going to keep that here as the, there's some support at 58, but if we're going to make a dip, this is where they can potentially move to. And that dip is just a dip for a pause. With that, we'll go and move into the cross rates. So we have seen a rebound here in the Kiwi for good reason when they held the cash rate steady, did no change. So we've seen a rebound after, you can say, this fantastic run we had for 3 weeks. So with that rebound, really opens the door for us to move back up into this area here, which is going to be 71.44, 71.44. That'll be the resistance. Not saying they can necessarily make it today, but I think that's the area that we'd be looking at. Still remains bearish. And support in the meantime. I think right there, see right there, it's going to be 70.66, 70.66, which would still be 50 pips lower, but I don't think we need to go any lower than that. 70.66. Now looking here with the euro yen, a little bit of advancement here. Which would take us right here. Well, actually, that is what we went to, which is 2031. We'll go right just a little bit higher, right before that key level, which is going to be 2042. 2042 for today's bias chart resistance. Actually, I had a little bit more room here, but we'll stay with this 2042 for today. And support is going to be right there with this open here, which is where they actually tested today, which is going to be 1977. So we've gone and seen the euro odd pair back with the strength that we've seen here with the Aussie, and we've come actually right down here to this moving average. But that being said, let's go and take a look at a fib, see if we can get some confluence here. Right at the 61%. And you can see right this bar coming right across here. That's going to be the support we're going to go with, which is 61.73, which is just a little bit below, about another 22 pips, is just a little bit below the 61%. So 61.73. And resistance is going to come in right there. 62.38 for today. It's just about to shed this bullishness. You could actually almost say we're just trading in a range. We'll see how this holds out. Hesitant to say, we'll see how this closes out for today. But open to changing this bias from bullishness. I guess after 3 straight days, we're going to need to go and change that. Now we've fallen below the 63.41, so we will go and change that to bearish now. And let's go to the Euro Kiwi. It says Samuel Clark opened up a or raised a hand, but you know what? I just checked the questions. I don't see anything here, so I do apologize if. But just took a look here and I'd check Q&A, but it says no open questions. So, well, anyway, that being said, let's go and move in here to the Euro Kiwi. So we've obviously seen a pretty good pair back here in light of what's happened, with the RBNZ keeping rates unchanged. We've gone and see this pair back, pair slide back into some support. Here's your support level right here immediately, as far as where they'd be looking at as a target and a stand. Take a quick. If they were short, looking to use as a target would be right there. And it looks like we just about hit it too. 68.50. 68.50. We're not that far away from it right now. And as far as resistance on a bounce back, let's go and take a look at here on a 2-hour chart. Right there, coming right across. You can see it. That would be resistance, which can be 69.16. And this would go back to bearish. There we go. Obviously now we're reasserting ourselves down here, so good move. And let's go into the Aussie yen. Now we've continued to remain below. We had this trend line here. The market broke. We haven't really been able to do anything. We've kind of jumped around a couple of times around this key level, this 74.02. You can see we challenged it again. We haven't been able to gain or garner a foothold above this market at this time. We're slightly above it right now. And the Aussie certainly worked a little bit in its favor, as it looks like they, along with the lead being led by the RBNZ, are not looking to go in and cut interest rates. I think that we can go in and push higher at this point. We'll see if it probably won't be something that will happen necessarily to today, but where they would shoot for is going to be right there. 74.96. We're only at 74.11. Let's take a look at a 2-hour chart and see if we can see anything a little bit closer. But I think we'll be able to move a little bit higher over the next week or so. And it's going to be right there. Right there. 74.32, which actually looks like we've already made that run up here. We sure did. You see, well, we've come up a little bit short, but you can see right here, this close, that's what they'd be shooting for, 74.32. And you can see support coming in right there. 73.67. Okay, moving into the guppy. Well, this has been a bit directionless. We've talked about that over the last few days. It looks like we're trying to make a little bit of a move here. We pressed up here right into this level. You can see it right there. Coming in here at 42.67. We actually had our bias chart resistance share yesterday right there at 42.64. Closer move has it right there, as I mentioned, 67. Can we push up a little bit higher? Yeah, I think we can. It's just that the bulls have been tricked so many times with Sterling that I think they're a bit hesitant. Can we push up a little bit higher? Yeah, I think so. I think we could eventually come right up to here. Just going to be 43.07. support in the meantime. It's going to come in right there. You can see the touch is coming across. Also, this close is open right here. It's going to be right there at 41.78. So any pullback should be defended coming into that 41.78. And lastly, take a look at the sterling nod. Well, despite starting strength, we're starting to see this market pare back a bit further with the strength coming out of the Aussie, being supported by the move with the RBNZ. It looks like the RBA is not looking to make any cuts either. So I think we will go and make a move down here in time, kind of like the guppy. Not anything's going to necessarily develop today, but I think that eventually we can test. For today, though, support's going to be right there, 92.07, which is what we already had. 92.07. We'll keep that for today, although I think there's a good chance we'll come down here at 91.62, but we'll keep the 92.07. And then on the upside, you can see the close, the open here, 93.12. So that closes up our look at the pairs. The euro has moved up a little bit higher up in here at this 92.26, but we're quiet right now overall. Yen just holding here at the 110 area here. Peso still holding up. Like I said, despite that, we did make that dip down here at 1862, which is what we just had listed as our bias chart support. Looking across the board, though, you can see S&Ps continue to remain strong. Look at that. That's on a 2-hour chart. We did have a gravestone doji yesterday. The market has actually closed above it, so you have to say it was invalidated because we've had this close above here. But this market is still chugging along, which is really what tripped the S&Ps to, the dollar yen to move higher. Also, the NASDAQ still, close to these highs. At that same gravestone doji, once again, they closed above it here. So it's not fully invalidated, but I'm just saying, and really the gravestone doji really is a caution at this point, which is one of the things I noted yesterday is a yellow light of caution. Doesn't mean it reverses. Get to see additional follow through. But like I said, we weren't able to close above it. We'll see what we can do today if we can close above those levels, which actually would send us to new all-time highs. And then lastly, with gold, we did go in and break now. As we were breaking lower yesterday, I mentioned that in the chat room, we had support at 1563. Looks like the low was about 1564.5. We kind of bounced back up a little bit. Nothing of any great significance, but actually gold's holding up relatively well when you consider where equities are. So still holding up well there. And that's what we have today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room, and have a good day trading.